Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cashflow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income producing real estate investments. Now, our guest for this week's show is real estate investment expert Blake Daly. Now, Blake is the CEO of StayVest, a real estate investment firm focused on large scale short term rentals, more specifically, converting boutique hotels from their traditional use to short term investments. Now, Blake started out with a single Airbnb unit, and over the last 5 years, has scaled his business to 4 states, 30 employees, and more than 200 current short term rentals that generate millions of dollars a year in revenue. So, without further ado, guys, I'd like to welcome Blake Daly to the show. Blake, my friend, welcome, and how you doing today?
I'm good, man. Thank you for having me. I was telling you a
Yeah.
little bit beforehand at at one of the hotels today in renovation mode and starting to see it all come to light here with this bigger hotel. But doing well, man. Doing well.
Yeah, well, excited to have you here. Excited to learn a little bit more about your business, pull back the curtains a little bit. But before we dive into your business as it looks today, I gave you that brief introduction. I know there's a lot more to the story, so why don't we back it up a little bit for those that aren't familiar with you, don't know who you are, don't know your background. Maybe tell us a little more about yourself.
Yeah, so I started out investing, but my very first deal when I was still active duty in the Air Force, I had just commissioned in May of 2019. We bought our first house with a VA loan that had a mother-in-law suite attached, and we rented that on Airbnb because our whole plan when we started, my wife and I, was to lower our living expenses, wishful thinking that we could live for free, and we knew we weren't going to do that by renting this unit as a long-term rental. So we're like, let's figure out how to do this as an Airbnb. We've stayed in Airbnbs. We're the cheap college kids before that, so we'd stay in the guest unit or the mother-in-law suite or the basement or whatever it was. So I was like, I think we can make decent money with this, and funded it on a credit card. We got the zero down VA loan, so that really helped, and then funded getting the unit furnished on our credit card and got it live. And within a few months, we are cash flowing, like had positive cash flow to live for free in that house. So it was
Hmm.
covering, principal, taxes, insurance, all the way down to Wi-Fi. Like everything was covered, and we had net cash flow. And I was like, I think we're onto something here. We need to look at more deals like this because we're living in most of the house. Like the main house was where we lived. It's like if we could go buy another place like this, house with a guest house and rent out the house would pretty much be all cash flow. So we started doing that and kind of built that as our initial strategy early on. Was looking for ADUs, guest houses, mother-in-law suites, small multifamily, and would drive for dollars, do handwritten notes to these sellers and find these deals. And in that first year, I think we got up to 11 units, uh, four of which were short-term rentals at the house in the guest town. One was a long-term rental, and then we had one single-family residential house that was a rental as well. And that surpassed our cash flow. Like that beat with the net cash flow from that small portfolio was making more than I made from my W-2 from the Air Force. And then like the light bulb clicked. I was like, I gotta go bigger. Like my goals are too low. Plus, I was just working myself into the ground with, all the guests, doing everything myself. Like me and my wife at a point in our portfolio, we're doing the cleaning. We did everything operational wise ourselves. I'm like, this isn't very sustainable. I need bigger properties, get to the commercial side where you can, get the efficiency, build the team with the higher revenue, and that's what we did. Syndicated an apartment complex, and then pretty quickly transitioned because multifamily at that time got really, really competitive. Cap rates were going down. All this flood of capital was coming into the asset class. I was like, all right, this is an opportunity now to make a little pivot. And we know short-term rentals, we know the Airbnb, the operations, all that stuff. And now we know commercial multifamily, how to, raise capital, did our first big raise, know how to underwrite the deals, how to manage it, how commercial real estate works. Like, let's go find something that, checks these boxes of our skill set and our, experience so far. And that ended up being these hotels that we can convert. And that's what we've been doing since.
Okay, very cool. I appreciate that background there. So I guess just one quick question before we kind of move on there. But I know that you used the VA loan for that first property. I'm overly
Mhm.
familiar and understand what it is, but how many times could that be used again? I mean, can you move from that one property to the next and re-leverage that VA loan
Yeah,
program
you
with
can. You can use it
zero
multiple
down?
times. Yeah, they've removed the cap on it, so you could always use the VA loan more than once, but you had like an entitlement amount. So say it was 500K, right? You could buy one $500,000 house, or you could buy two $250,000 houses. So that was like you're up to what your entitlement was. And as long as you qualified, like as long as you had the DTI and could qualify for the loan, you could use your full entitlement. So our first two of our first three were VA loans. So we lived in one for the year. And then the next year at the 12-month period was under contract at month 11 because I knew what the plan was. So we used our VA loan twice. And that's like a common misconception is that a lot of people only think they can use it once if they even know that they can use it. So that's huge, huge for military folks.
Does it take in consideration the income or potential income from an investment property, or is it solely relying upon your W-2 income to
Yeah,
qualify?
you can buy anything residential with it for so 1 to 4 units and use the expected rental income of those additional units to help you qualify for the loan. Now, if you're going to do short-term rentals like we were, that's where it gets tough, right? Is not a lot of lenders are going to use the short-term rental income to help your qualifications, and they're going to want like a lease in place. Or they'll use like 75% of the expected rental income. So you do have options there to qualify for more bigger houses. I mean, people have done this in all the high priced markets, right? Hawaii, San Diego, coastal Florida, where military bases are located. Housing is expensive, and prices are expensive. So that's a way that military folks, and really anybody, right? Anybody can use the FHA loan and do the same with 3.5% down. Get into real estate investing from the jump with like the lowest risk thing you can do, which is you always need a place to live. Why not offset your living expenses and learn how to, be a landlord or learn short-term rental operations if it's going to be an Airbnb unit, like gives you so much flexibility.
Yeah, no, I appreciate that. So curious, what does your business look like today, to what it did, with that those first 11 short-term rentals? I know that you made a comment of, really there's something here, there's a good business opportunity, and I just need to do it at larger scale. So talk to me about that pivotal moment, when it happened, and then what did that first, I guess, larger scale project look like? What did it consist of?
Yeah, that transition point really came out of like knowing how much work I was putting into it, going house by house, right? So we were doing that first year we did uh 5 or 6 deals that we kept, and we did another flip, a couple wholesales. So it was like every month there was a closing lined up, different real estate agents, if it was an on-market property, different contractors, different title agents, all these different parties to kind of satisfy. And then on the operation side, I've got to bounce around to all these different deals because I really didn't have enough revenue to hire myself out yet. Like I replaced my income, or like if I would have been able to leave the Air Force, I would have been able to replace my income. But there's a difference in your cash flow covering, your income or your living expenses, but there's another level you got to be at to start to hire a team and bring on payroll and right have people on your team to do the things so you don't have to. So the inflection point came from like I need a bigger deal with more revenue, more economies of scale into it that I can operate more efficiently, have all the units on one site, have, laundry on that site, all the linens there, all the cleaners go to one place. And because there's multiple units, it's going to earn higher revenue. So then I can hire out the admin, the guest communications, all of the stuff that takes my time away from going out and buying deals and, managing kind of things from a high level. So that's what led us into the first one. And the first one wasn't super huge. It was like we had 8 short-term rental units before that, and our first deal was an 8-unit multifamily property that we converted to like hotel motel use. And it's really like a hybrid. Calling it a boutique hotel is a little bit of a stretch. It's more of like a hybrid Airbnb at that property size. So that one was really easy to say, all right, I've got 8 short-term rental units already. This is going to be 8 units on one property. So it wasn't like going out and buying a Hilton property or a Marriott property,
Yeah.
like for my first hotel. It was an easier transition, and it was $357,000. So it was also about the price, of a house, or like houses in the Florida. It was kind of a more expensive house, but had a lot more revenue. So my entry point was really good. It was a mom and pop type operator that lived on site, did everything themselves. So it was outdated. They weren't on Airbnb with it. They did, you know, I don't even know how they got reservations. People ought to walk up and find them, I guess.
Well, you
So
said
that was an
you
easy
and you
transition.
said you kind of converted it over to a like a hotel use. I mean, were they running it? Was it more of like a longer term rental
Yeah, it was
site
kind of like a
type
rent by
stuff?
the, there's different lengths of stay. So it was like rent by the week, rent by the month. I don't
Okay.
think anybody at the time was on actual leases, but had people staying there for, 6 months, a year, whatever. Very just
Yeah.
a discombobulated business plan.
And then let's talk about what it looks like today. What is the true business model? You'd mentioned it's a hybrid of Airbnb to a hotel. I guess just for those that aren't aware, I mean, I think everyone stayed. Probably it's listen, everyone stayed at a hotel before. Not everybody has stayed at a Airbnb. I mean, surely lots of similarities there of a short term rental to that of a hotel. I mean, one could probably put most of those two in the same bucket, but there's a few differences as well. So maybe help better explain what that business model looks like.
Yeah, I think like Airbnbs and hotels, they both are nightly rentals, right? But the use of them, the appeal, the draw are different. So with Airbnbs or short-term rentals, right, whether it's Verbo or whatever, but with a short-term rental, it's it's typically going to be more of a house, right? Where you're staying there with a family or your family, a group. You've got the ease of booking because you just go on your app, you book it, whatever, and it's got more amenities and more appeal and ease of booking. Now with a hotel, you have like the consistency and the quality, the consistency and the standards, right? If you stay at a Comfort Inn in Albuquerque and if you stay at a Comfort Inn in, Tampa, it's going to be the same Comfort Inn. So I think now is like things have evolved with Airbnb, you never know what you're going to get. And Airbnb's had this big focus on quality because they've had such inconsistent standards. So that is, I think, where you get like the perks from the hotel. And then you can have like more amenities on site was like pools, fitness centers, free breakfast, all that kind of stuff. Whereas the amenities on like the hotel side or on the Airbnb side are things like game rooms, hot tubs, the things that when you stay in a cabin or you're going on vacation that are good for you and your family. So I think what I've done in the boutique hotel space is really a combination of those things. Is the consistency and the quality and the standards that you're going to get at any of the units across any of my properties anytime that you stay there, same service, same kind of experience, and is the amenities and the ease of booking from the Airbnb side, right? So being able to
Yeah.
go on those platforms and find it anywhere that you're looking for a place, and also getting a really smooth booking process. If you find it, you book it, you get the code, you check in, you stay. You don't have to like check in at a front desk. You don't have the friction of the hotel. So
Right.
that's where the hybrid and the overlap becomes. Is you kind of get the pros of each, and you mitigated the downside on each at the same time.
Got it. Got it. No, I appreciate that. I'll tell you that, like, even my personal experience with Airbnb, I've been staying and, I've been using Airbnb probably, I don't know, 6, 7, maybe 8 years, maybe longer than that. I'm not sure, but I would tell you that to your point of this, the, quality standards. I mean, I've personally seen, in fact, I'm of the mind now, unless we're, with a big group, we just got done taking a couple week long family vacation up at a lake up in the Carolinas. And so, I mean, we needed a big house for our group, and we wanted something lakefront, so a hotel wouldn't have served our purpose, and so that was a very good solution. But when it's just call it myself and my wife, or even just a family of four of us, if we're traveling for just a couple of days, and the option is either Airbnb or hotel, nice hotel, like something we can stay in that we can be comfortable in for just a night or two. A lot of times we're going that hotel route only because of a lot of the issues we've had personally, staying in Airbnbs over the last. It's really been. It seemed like the major problem started during COVID. Obviously, there was a major influx of short term rentals that flooded on the marketplace,
Yeah, huge
um,
amount being
and
added.
just the quality control. Just it seemed to be through the, just down the toilet. It was horrible, and I had more bad experiences. Very, whether it be Airbnb, mostly Airbnb related. And I'm not going to say it's a fault of Airbnb per se. Just surely they have some blame to it, but we had more bad experiences than good, meaning that we were overwhelmed with the high quality versus that of like the pictures, and a lot of the reviews really don't speak to what I'm
Yeah, it's
seeing
like
here.
Instagram versus
Like
reality.
furniture's broken. I mean, it's these pictures that you could tell were enhanced. I mean, like this furniture's worn out. These pictures are 5 years old. That like that type of stuff seemed to be pretty much the norm. And so we've kind of reverted back to, given the option, staying in hotels, just because, again, to your point, when you've got like national brands like Hilton and Marriott, things like that, there's a much higher consistency in the quality of the product that you're going to receive. It's never perfect, because I've surely stayed in some Marriotts even that just like, okay, guys, like this is the furniture in here is, nearing its life expectancy. Remodel this thing. You remodeled the
Right.
lobby and it looks good on the outside looking in, but when you get to the rooms, you can tell this bathroom hasn't been touched in 15 years, or
Yep.
the carpet and
Yeah,
things
and
like
that
that.
and that difference, I think, there's tons of people who've experienced what you just said.
Yeah.
So there's this big addition of available listings, right? People becoming Airbnb investors, want to do short-term rentals, get higher cash flow, all that kind of stuff. And through that, like Airbnb was growing in popularity. So that, there's demand for hosts, and then the quality started going down. And you look at a hotel, right? Especially like in this Marriott and like Hilton flagged hotel world, there's quality standards. So it's typically an independent owner that owns the hotel. They have a franchise agreement with the brand, with Marriott or with Hilton. And sometimes there's even a third party involved, which is the management company that manages the hotel. But in any case, you have the standards under the franchise agreement. Like you have to set so much back for your FF&E, your furnitures, fixtures, and equipment reserves every single year. And sometimes they even have like you have to spend this much on new furniture to replace every single year. So you have these like tenant standards for
Hmm.
the owner to upkeep that property to a certain level. You have zero of that on Airbnb, right? So
Yeah.
you could put your truck bed on Airbnb, you can put a tent on Airbnb, you can put a luxury property on Airbnb, and anything in between. So there's been no way for them to get this level of standard in the experience of what you get when you stay. So that's always been what we've tried to be the bridge between, is like I was saying earlier, is like the quality and the standards with the appeal and the functionality and the amenities and ease of booking of Airbnb, because I think that's why it got so popular. And we've done really well with that model. And our smaller ones operate like these hybrids where it's, automated check-in, no staff, no front desk, to where this newer one, it's bigger. We've got 16 staff members on site. We have front desk. We have a wedding and event venue. We've got uh, 3 full-time maintenance people on staff as well to maintain the 10 acres and everything here. So it's
Hmm.
definitely a spectrum of like the operations involved, but the booking process, the back end, the marketing, the back end operations are all consistent regardless of the property. Because when you build the systems, that's the cool thing about like commercial real estate or a portfolio at scale, is when you get the systems in place, then you can scale on top of it, and that's what we're doing
Yeah.
now.
Yeah, no, all good points. One other thing I wanted to make mention of is the as far as like, at least my experience, to kind of harp on, making the decision of a hotel versus Airbnb. At least again, this is me. I looked at, with all the fees added, like the cleaning fees and then any additional
Oh yeah,
Airbnb related
hotels have got
fees,
so
like,
much cheaper
let's
comparatively.
say, yeah. So I mean, like if it's a short term, if it's like you were talking like, 1 to 3 nights, like even if you found the great nightly rate on an Airbnb versus that of a hotel in the area, once you actually factor in all the additional fees, like it's hands down the hotel most of the time is going to be a much more cost effective option. So again, if you're staying
Mhm.
for 5, 6, 7 days or a longer trip, then Airbnb, those fees get kind of diluted out, but they become fairly hefty if it's a short term stay. Again,
Yeah,
that's just my
absolutely. Yeah. I think
experience.
more people are doing that too. More people are going back to hotels. The travel metrics, ADR, average daily rate, occupancy, the demand have all increased on the hotel side, because I think a lot of people are doing that same thing. For
Yeah,
you to go, to come to the Smoky Mountains where we have our hotel, and to go book, an Airbnb or a cabin for a couple of days, you might be in the same ADR range, average daily rate, of like what you charge for the
hmm,
night. But then you get the taxes and fees, the
yeah,
cleaning fee, and whatever else the host tax on there. And then they're like, hey, if you could clean this place yourself before you leave, do a load of dishes, do a load of laundry. It's like, why am I paying the cleaning fee if
yeah.
I'm doing all the stuff? So it's like you have that inconsistency that's pushing a lot more people, travelers, to the hotel space. And then like, you look at a lot of the other things which we can kind of dig into of why hotels right now. But yeah, I'm very bullish on them.
So be curious to know what type of data, your data points you use to drive your investment decisions, on what's a good opportunity for, one of these, I guess, but now your model, your boutique hotel business model. So, like market selection, Ideal
Mhm.
size of the hotel. I know the project we're working on now is the biggest of all of them. It's a fairly large 100 plus unit hotel. Average daily rates. I mean, again, just help me better understand the business model and how, of all the deals you look at, which one rises to the top and why.
Yeah, I think from the beginning, like if you look at the definition of what a boutique hotel is, like what does boutique hotel even mean? And it's really three things. It's small, and I'd say that like generally somewhere in the 50 unit range, give or take. So we busted that one with how big this place is. But small, independent, and unique are like the three criteria for that. Independent with it's not operating under a flag, or the flags do have, like the big brands do have some boutique hotels, but they operate under their own brand.
Mm-hmm.
That's like, it's facing as its own thing, not Marriott on the sign. And then unique with their design, the amenities, how it brings people in. Like it's not your standard Comfort Inn and Suites. Like it's got a different appeal to it. Typically like a theme, and they're most of the time in like really trendy destinations too, like a downtown, Soho district or whatever. So small, independent, unique. So when I'm looking for those things, I'm like the first thing I look at is destination markets. I like to be in nice places that people are traveling and that I like to go to as well. So like we're cutting out most of the Midwest. Like we're not going to buy a boutique hotel in Des Moines, Iowa. Sorry if there's anybody on here from Des Moines. It's probably a very nice place, but not where I look to buy. So I start out with like the destination markets. We've owned in South Lake Tahoe, Panama City Beach, Florida, Fort Walton Beach, Florida, and now the Smoky Mountains. And we're looking at more places like that, right? Like places in the mountains on the the Appalachians, the coast of Florida, the Atlantic coast, Gulf Coast. So those kind of markets. And then after that, I'm looking at the population growth in those areas. Like I want to know people are coming in and that there's like a net positive trend there. And then I look at the sources of leisure travel. Is it a national park? Is it a market like Nashville? There's a lot of conferences that bring people in, consistent travel. Plus you have like Broadway and all those other things. So the sources of leisure travel are a big one for me. If it's like a one trick pony kind of town, I don't typically like that. If there's I like something that has national park, and maybe, another like, like Smoky Mountains has a national park, has Dollywood, has all like the bars and stuff in Gatlinburg. We're on the peaceful side of the Smokies, so that's its own draw and appeal. So I like things that bring multiple people in because it's going to be easier to market to and attract guests. And then on the unit size, or like the property specifically, I wanted to see if it matches that kind of like boutique vibe. Like, what does this have on like post renovation? Like, what is the value play here? Is it to renovate the units? Is it to add amenities? Here we're doing both because it needed both. Um, and how do you match the design plan and that uniqueness of the people who are already traveling to that market? So here in the Smokies, I wouldn't want to do something, super modern and upscale that might fit better to like a West Coast, in LA or something like that. Here we're going with like a mountain modern theme because it fits the people coming to the Smoky Mountains, the natural hardwood furniture, darker colors, wood accents. So we're doing wood ceilings, new fixtures, things like that.
Mm-hmm.
And then we've got, pool bar, pavilion, pickleball courts, and putt-putt, like the things that people want to do outside and bring families in. So it's about knowing why people are going there, what that demographic makeup is. It mostly families? Is it mostly couples? And then what's the potential on this property to match that to those people? And if you put X amount in per unit, what's your X amount per unit out on the back end? So if we're gonna, put in 20,000 total per unit on renovations, can we get 50,000 unit or $50,000 of value per unit on the back end? And if
Mm-hmm.
so, like it makes financial sense, then we'll pursue it.
You made a comment about the peaceful side of the Smokies. I'm not familiar with that. What does that mean? I know the
It's
Smokies. I know that
I
area, but
think,
I don't.
have
I
you
didn't
ever
know
been
there
to
was a peaceful
Gatlinburg or
side.
Pigeon Forge?
I
It's
have.
like,
Yeah. Yep.
so those are like hectic, right? It's what, 3 or 4 lanes on the
They are hectic.
on the parkway, and it's just bumper to bumper. To get from Pigeon Forge to Gatlinburg, which is like what, 4 miles, it can take you like 30 to 40 minutes sometimes. So that is what everybody calls around here like the zoo. Like it's crazy. They don't like going over there. Nobody wants to pass over the parkway. So if you're on the south side, you'll drive up and around the Sevierville before you go to the other side of the parkway, because you just get lost in a wormhole. So we're like 35 minutes away from that. The national park runs from like southwest to northeast. So we're right on the line to the national park, just like Gatlinburg is. Like the gate is right past the stoplight in our town. They call this the peaceful side because it's more about the natural recreation. So there's river tubing is a big draw down here. Horseback riding. There's a couple golf courses, a bunch of hiking. Mountain biking's huge. There's a couple 100 miles of mountain biking trails right around here. So it's all that kind of stuff. Like a lot of families come here, and what we're seeing more is like, this whole area is kind of split up in valleys. So it's like Pigeon Forge and Gatlinburg have like kind of filled up with development space. We're getting like the spillage of guests and people staying over here more. And they'll pop into Gatlinburg or Pigeon Forge one day on their vacation, but stay over on the peaceful side. So that is
That's
what we
funny.
have going for us is, less traffic and less people, but still a ton of demand. Like there's 3 million people that come on the highway right past our property into the park every year. And that's who kind of we're targeting is the people who are coming here for the recreation, people are, the families that are coming here, but don't want to deal with the craziness. So we have like
Yeah.
the same demand, same seasonality, less rates. So what we're trying to do through this is get those rates up to match more of what's over there and bring people in with more of a, you know, product market fit of what we have amenity wise and the quality to match what they could get over there. And even more, really, there's really not anything in the air that's going to have all the amenities that we'll have on site. And that was intentional. Like we wanted to see what was missing, what we could add that would be cool. It's like, seriously, that's the thought about it. I was like, what would be cool? What would picture well? What's going to attract mom and dad booking a vacation,
Hmm.
for them and their kids coming down here. So that's the
Yeah.
peaceful side.
Oh, that's funny. So I got a funny a story, a recent story of Gatlinburg, Pigeon Forge area. So I had not been realistically, I had not probably been to that area for probably close to 20 years, 18, 20 years, something like that. Last time I was up there, and even then, it was craziness, right? I mean, it's just lots of development. Even that this is like pre 2008 crash. I mean, lots of development happening, lots of just again. It's exactly what it was today, just maybe not as far along, not as far evolved, I guess.
Mhm.
So there's even more development today, but so I do a trip with my boys. I try to separate. I got two boys, 7 and 10, and we try to. My wife and I try to grab one of them a couple times a year and like do like just dedicated trip, like dad and one son. Not both sons and
Mhm.
not the whole family. And so Allegiant flies out of Tampa, where I'm based out of. It goes directly into Knoxville, and it's an easy flight. It's short and
Yep.
sweet. It flies in on I forget, I think Friday morning and leaves on Sunday. And so I took my youngest 7. I thought it'd be a fun trip last December. And the Christmas parade in Gatlinburg was like then. And so we got a hotel like right on Main Street. Again, I hadn't been there in a long time. And I assumed that in the wintertime, while people will come for the lights and all that, that it wouldn't be as crazy maybe as the summer months. And it was an absolute shit show. I mean, it was the worst
They call it
traffic
Hell
I've
Week down
ever.
here.
I mean, it was horrific. I mean, I had a great time. He has great memories from it. He enjoyed it, but it's like literally a nonstop carnival. And
Oh
I'd
my
say
gosh,
that
it's
one of the
wild.
saddest
Yeah.
things though that I saw, and obviously that the time of year the leaves are off the trees and things like that, but even then, I feel like they've somewhat raped like the mountainside there. Like you literally, there's so many homes stacked on top of one another that like literally
You
it
lose the
looks almost like a
views.
third world country. You know what I mean? Like as far as like how many
Looks
homes are
like a
like literally
favela
just
coming down. Yeah.
it's crazy. I was like, gosh, like
Yeah.
just the no restrictions that seemingly are in place of like, okay, we're not gonna allow any more development on these mountains. Like, hey, as many as we can fit, we'll get them up here.
Just keep
But I
selling
mean,
it.
we had a great time. But again, I was like, this is not what I remember. It's kind of what I remember, but not really. This is pretty intense. I don't think we're gonna come back here. I'm
Mhm.
glad you had fun, my son. But
Yeah.
this is a little too much for dad.
Yeah,
And
so
we
ton of a draw and appeal. It's just over here it's more laid back. There's still we still have a bunch of
you're not gonna put a go
annual
kart
events
track
and
in. I think
festivals and
they've got
stuff.
like 50 of
No
them over there.
go-karts. They don't have a sewer system in Townsend. So like now that we're getting more involved in the community, trying to get into these community development meetings when they start having them because they've had some potential developments get pitched to the city here. And Yonder was one of those communities. They have like the tiny
Mhm.
homes and airstreams and stuff like that with really cool amenities. And that got shut down because they didn't want it to become like Gatlinburg and
Yeah.
Pigeon Forge. But we don't even have like the sewer system to support that kind of development. So for us to get like 10 acres, 130 rooms, we're the biggest hotel here. Like there's a ton of future upside is like as this stays keeps its character and gets more popular and development's limited,
Hmm.
like we like the constrained supply and not
Yeah, that's right.
having a Marriott or Hilton go up next to us, which is gonna like kill our absorption and take guests away from us.
Well, let's talk about this deal that you're working on. You're right in the middle of it. I would love to. So you've kind of shared the location. 130 units, right, give or take.
Yep.
Talk about, I guess, how you found the opportunity, what excited you about it, and then what are some of the major plans that you're currently implementing. Literally, you're there right now. You're
Yep.
implementing the turnaround strategy, and what does that consist of, and then what does the projection? What do the projections look like once it's actually completed and stabilized?
Yeah, so we got into this for 7 million. It was 130 units, so it was 53,000 per key coming in.
Mhm.
So when this got sent to me from a Facebook group, imagine that. Somebody tagged me in it and was like, "Hey, does anybody do hotels?" And it's like three people tagged me. I was like, "I'll take a look at it." It's Smoky Mountains, place that we know decently well. We've done a lot of vacations here. I was always wanted to get something, just we were down in Florida and then Utah as the Air Force moved us around. So it never felt like the right time to hit the acquisitions hard here.
Mhm.
But when I saw that it was like 53 per key and, did the quick analysis, I'm like, I think these units can make about 30,000 per key per year. So I'm buying it for 53 per key. They're making 30 per key. Like the unit economics are great right there, right? Like that is what kind of stuck out to me. And I knew the market, I knew the area. So as we dug into this, did our walkthroughs and everything, I could just tell how not quite dilapidated, but how like tired out the operation was here. They had a total of 4 staff members on a good day. Nobody was ever at the front desk. People couldn't check in. They stopped doing breakfast. Cleaning had become a mess. Maintenance was almost non-existent. Like it was a hotel here, but no hotel operations. You can't run 130 units with 4 people or 3 people. So when I saw this, I saw the condition of the rooms. I mean, they really are pretty large hotel rooms, and there's a mix of suites. There's a cabin on the property, which our phase 2 we're kind of thinking is to put some more cabins on the property as well as we build it out and stabilize the hotel revenue stream. Um, so when I came in, I saw all the potential here. It's 8 different buildings spread over 10 acres, mountain views almost from everywhere on property, 3 pools, indoor pool, 2 outdoor pools. So there's a lot here already, but it was not being ran right. Reviews were terrible. We're still there were so many. There was like 700 plus reviews, and they were just all dog shit. So we've been working on getting those up, and we're making slow and steady progress. But it was like, how can we come in here, renovate the rooms? What design style is going to work for this market, and what kind of amenities can we add? Utilize all the space here, because that's what people come to this side of the Smokies for, right? I mentioned the peaceful side is to be outside, is to go to the national park, is to come and enjoy the natural beauty. So how do we kind of mesh the renovated interiors with the upgraded exterior and the amenities on site? So we're resurfacing one of the pools. We're decking out the indoor pool area with the hot tub. We're adding pickleball and putt putt. We're renovating the outdoor movie theater screen that had just like fallen down and was dilapidated. We're bringing that back so we can have, family movie nights and do, concert in the park type things on, our seasonal events. Um, we're adding a big center pavilion with an outdoor bar and kitchen and a big fire pit. So like that's going to be the middle statement piece on the property that really brings people together. We're adding a pool bar as well at one of our outdoor pools. And then the wedding and event venue wasn't being used at all. I think they're just renting it out, like just like $300 for like a get together kind of thing
Hmm.
a couple of times a year. So pretty much non-existent, but was already in good shape. So we're touching that up, adding some bars. We've got a full-time sales manager on staff now that's booking out weddings and events, and then creating these group gathering places all around the property so that families can hang out. Right, we're adding a game room and a fitness center too. So it's like the kids are in the game room, mom and dad are out by the pool bar having a drink, everybody's running around having a good time. So it's like the whole thing I saw when I walked this property is there's so many opportunities to create an experience here more than just
Hmm.
going to stay at a hotel, right? It's the people that are going to stay here and why they're staying here that makes this special and has all this potential. And as we kind of got into our design plans and this started to flesh out, then it became like, shit, we're going to have a pretty good deal here. So I think the 30,000 is probably conservative. I think it was doing 1.6 million of revenue. Um, before we bought it on the T12. This year we'll probably do in the 2.4, 2.5 range, just through our, operational improvements, really, because we got delayed a few months on our renovation schedule, and we'll work that up to probably a top line revenue of about 4 million through our weddings and rooms through through those two revenue streams. And we'll be taking the NOI from about 600,000 to just shy of 2 million. So it'll be about like 55-ish percent expense ratio. And a lot of that comes from, the overhead of labor to have all the people that we need to run this thing, but will be a great deal. We'll over double the NOI, over double the value of the property to probably about 15 to 17 million once it's stabilized and we're at our kind of like exit time frame in 5 to 7 years. We projected a longer term hold on this because we'll have double digit returns once we get the rooms renovated and everything going. So we didn't want to have to structure like we have to sell it in 5 years to meet investor returns. We wanted a long holding period for good cash flow, extended tax benefits, all that good stuff. So that's the high level plan.
So what do you think? I guess what was the average daily rate, with the prior ownership, and then once you guys meet stabilization, where do you forecast that average daily rate to be?
Yeah, I think they were at about $100 at about 32% occupancy. So
Wow.
not very good.
Yeah.
And once we get our all of our rooms renovated, say, probably next spring, summer, as we get into that post reno schedule, we get our marketing, everything kind of picks up. We'll range from like the 180 to 220s depending on the unit and the season, and our occupancy will probably be double, probably in like the 63 to 64% range, which is about where the market is, in between low 60s and mid 60s for this market, because you get the seasonal swings, which is good for hotels, right? So we want to push higher rates, all things equal, we'll take the higher rates and lower occupancy, because our gross revenue is going to be higher that way than lower rates and higher occupancy. Then you just got turn and more variable costs. So that's what we're pushing towards, and should be like a consistent, 200 to 300,000 per month pumping out of it.
Curious to know how you guys finance this. I mean, obviously the occupancy was low, thing was kind of dwindling away. The operations weren't great.
Yeah.
Just
That's what makes it hard. Yeah.
Yeah, that's it. I mean, it's hospitality is already hard enough to get financed, and now you add a bunch of additional complexities, i.e., the stress amongst many other things. How'd you guys finance it? Both
Yeah,
the
that's
acquisition as
exactly what I
well as
was going to say.
renovations.
Yeah, hospitality, not always, but can be harder to finance. And the double whammy with this property is that the current cash flow at purchase would not support the new debt at the purchase price plus the renovations, because we got a loan to cost loan. So when your income won't cover the debt and your hospitality on an asset that's already seen from lenders is higher risk, higher default rates, all that kind of stuff, then that's your double whammy. So we had a tough time getting financing for this one. Went through, I think, 55 or 60 lenders. Like, no kidding. Talking on the phone, sending the package, working with these lenders, and got really deep on like 2 or 3 of them. And then and 2 ended up pulling out after months. So it took us all just shy of 7 months from under contract to closing to get this, and we had to go through 2 extensions because lenders fell out, and because of that, the extra time, investors fell out, so we had to raise the total amount twice, which never makes a deal easy. But we ended up getting like a commercial bridge loan to get it closed by the end of the year, and then this whole time we're working on a USDA loan, which is the full purchase plus renovations plus working capital and reserves, like a full loan to cost loan, which is really helpful because we needed all that to get it up and running for the extended ramp up period from getting the rooms renovated and the income going up. So we closed it with that commercial hard money loan by the end of the year. And then just about a little over a month ago, we refinanced basically like a debt restructuring to the USDA loan, got the renovation funds, and we've been renovating for like the last 5 or 6 weeks. And that's how we did it. And we've done those commercial hard money loans on a few other hotel deals. SBA financing is another pretty common way, but the way I see it is like with the private commercial hard money loan, you're paying higher interest, higher points. But when you have these deals that have really great upside, great income potential, and have no other way to fund it, like, it kind of is the price you pay to get into it. And you just got to make sure your numbers work out with the higher debt assumption, that you had the reserves that you, if your renovation does get backed up or you run into snags or whatever, that you can get through paying that debt service until, you're on the other side of it.
So no opportunity for the seller to carry the debt on it. They didn't have an interest in doing
Yeah,
that.
three of my six hotels have been seller finance. This particular one, we got close. We got really close on an assumption, and then the bank would not take it because this, mid 23 interest rates were, kind of at their peaks.
Yeah.
Hospitality was not seen favorably still, which I still think there's great opportunities, but lenders don't see it that way. Um, they wanted the hospitality asset or the debt off their books, so they wouldn't take the assumption. So we had to kind of bob and weave and roll with it.
Makes sense. I probably would have done the same thing if I were them, right? Given the time frame, right? And just trying to
Mhm.
get one of these probably lower interest rates loans off the books, and plus the asset sounded as though it was in their eyes. I'm sure if they went and made visits to to that deal, they saw the same thing you saw. They saw the
Yeah.
stress and just
You know what? I've already thought
challenging
like when
operations.
they come
Which,
knocking on my door to do the
yeah,
refinance
you're right.
post stabilization, like,
You're
nah, we
right.
can't do it. We're gonna go with somebody
Absolutely.
else. Sorry. You
That's
guys can
why.
get in
Yeah.
on the next one.
That's funny. I mean, I just had this conversation with a lender last week. An open conversation like this, just really the difference in perspective of a lender. This individual I was talking to, so had been on the lending side, investment banking side for like 15 years, and now is on the other side of the house. And I was like, it's two different sets of lenses. But I do think that the
Mhm.
entrepreneur can better see both sides of the equation much better than that of just your typical lender or banker. I mean, they're just like tunnel vision.
Very one dimensional. Yeah.
Yeah, very one dimensional. Like can't
And you
even,
got to think too,
consider
like it
outside
is
the box
all
thinking.
risk mitigation on their part, right? But if the way I look at it is, I know I'm going into a, they call it higher risk asset class. I know that, but if you're going to be right buying a deal, you got to go into it knowing what those points are and then mitigate that. And a lot of times it's in your, your deal structuring, right? If you can get seller financing or assumption or something like that, great. If you have to go the commercial hard money loan, what does your reserves look like? What do your personal reserves look like? Like who's going to put money in the deal first if shit hits the fan? Is it going to be you? Like, do you have enough personal capital to do that? Or are you going to, have to do a capital call
Mhm.
and then never have those investors invest with you again? So you got to think about these things, right? So I always raise plenty of reserves to weather kind of whatever gets thrown at us. And this renovation loan got in the USDA loan, that debt restructuring got delayed over 3 months. So we missed our summer season with our first renovated rooms because of that, which created a hole in our pro forma. But we've got, a plan to get back to it in the fall. And get more rooms renovated faster now to mitigate against that not lost revenue, but the revenue that wasn't learned, and then plenty of reserves that we can sit on and have, multiple months with no income and still be
Mhm.
fine, right? So we want to
Yeah.
look at the higher risk points and know how we can work within that framework to still be fine in any of those cases. Whereas the lenders, it's just numbers on a spreadsheet and they don't want to take
That's
on the
right.
risk at all. It's not about mitigating the risk to them, it's about avoiding it.
So what's the ideal target completion? I mean, when does the season really start? I know that obviously you've got like some winter and I'm sure there's there's stays throughout the even the cold winter months, but I mean, is
Mhm.
it April, May? I mean, when's it really start to kick in?
Yeah, so for us, we really have good seasonality like March through December. So we've got this, time frame after Thanksgiving and before Christmas where we do get that lull at the beginning of December into November. But summer's really good, right? Everybody's on summer break. Come to the national park. It's the most visited national park in the country, and 70% of the US can get here within a day's drive. So from, all summer, it's the whole area is a lot of activity going on. And then the leaf season, so late September through early
Oh, that's right. I
November, when
forgot
the
about
leaves are
that.
changing, there's a bunch of
Yeah.
festivals. So that's actually October is our highest month of the year here, even more so than July. So we're coming up on our highest season. We'll have all of our units available for that, our new renovated rooms. So that's going to be really, really good months for us. And then you get that dip off in like the winter. Then you have that hell week that you experience between Christmas and New Year's, where it's just like gangbusters. Like we'd need, double the amount of rooms that we needed. Like last year we closed the week before and had the new team in place, went live on the OTAs, and it just like crumpled us. I was like, all right, that's good. Pros and cons. We got the whole hotel filled, but we learned some operational things for sure. And then January and February are like, it's like tumbleweeds rolling. It's like, where's everybody at? Those are really the only slow times.
That's a good time to get things done, though, right? Do you have a GC that's do you have like a larger group that's done a lot of hotel renovations that are helping you manage the project, or are you
Do
GCing
yeah,
yourself?
commercial general contractor who's done a lot of this type of work, and going through this, it was all about the selection. Right, one of those risk mitigation points is we've got to meet our renovation timelines. Our delay was all USDA, nothing construction related yet. Knock on wood. But yeah, commercial contractor, professional crew. A big point is like in-house labor. I really don't like GCs that contract everything out because then they have no control of their subs and their timelines. Like maybe that sub takes another job and it delays yours. So I like the GCs that have, the carpenters, the laborers, the drywall guys, the painters in house, and this one does. So they've had three crews going full time since we started the renovation, two on the rooms working through ceilings and trim and flooring and paint, and then one on the exterior amenities of the pool bar and pavilion. And there's been a lot of subs on top of that. So it's been a lot of activity, a lot of F-150s and Chevy Silverados pulling in and out of the parking lot.
That's awesome. Good deal. Well, wishing you all the best with that, my friend. Sounds like you
Thank you.
guys are on the right track. And again, hopefully you'll have it all wrapped up and be able to just take advantage of a full season here coming up fairly shortly. And I know you got a big event happening there in the next week or two as well. So best luck on that, and hopefully it all goes off without a hitch. And I guess
Thank
Blake,
you.
for the as we round this thing out here today, for those that I guess that are tuning in, want to learn more about you, your business model, have an interest in what you're doing, where's the best place to track you down?
Yeah, I think the best place, like if you want to get a hold of me, Instagram, if you guys want to, and it's my handle is Blake J Daily on there. But if you guys just want to learn boutique hotels, I put a lot into to my YouTube and share a lot on there, how we do our projects, how we do our underwriting, the way we, look at and analyze these deals and operate them. So there's a lot of good free stuff on there. Like my idea is just give it out there and good things happen from that. So hopefully that can help you guys take advantage of it. And you have any questions, hit me up on Instagram. Happy to
Good deal.
talk. I could talk hotels all day. So
Awesome. Well, Blake, I appreciate you coming on the show, my friend. Thank you.
thanks for having me, man. It was fun.
Alrighty, guys, that's all we have for this week's show. So until we meet again next week, this is your host, Kevin Bupp, wishing you huge success. Take care now.